Hey, good evening. Dan here, and it is November 1st, and Apple reported earnings. They looked okay. Not that anybody should care what I think about whether they looked okay or not. The stock is down, and that's all that matters. At least it's all that matters to me. So I mentioned yesterday, let me stretch this down a little bit. I mentioned yesterday in the chart of the day video, that's why I'm following up on it today, that the implied move on Apple was about $11 or so, and that took it up to 230 and then down to 210. You know, I have 208 here, but it's basically 210. Anyway, and so the company reports earnings, stock falls down, and the idea is that if this is the box between 210 and 230, that Apple is really that's what the option market implied the move was. If that was the move that it was supposed to be, then the idea is that, like, let's say the stock, forget about the upside here because that's not relevant. Let's say the stock's down here, you know, anywhere down here. What's going to happen is, just because of the dynamics of the way the option market works and traders unwinding positions and taking off hedges and this and that and the other thing, if the stock opens up down here someplace, it's likely to snap back this way. Similarly, if the stock were to gap way up, it would be likely to snap back here. So really, the place where you would expect this stock to stay, at least till tomorrow, at least into tomorrow, is in this green box here. So this could set up a nice trade tomorrow. The stock isn't down that much. It's down less than 5%, which doesn't really stretch the rubber band that tight, frankly, and that's what you want. You know, you want a stock that's really, really displaced so you can take the other side of that panic trade. But here, you know, it looks like the stock's already down a bit, but that's really not that relevant because after this earnings, Apple's a big, you know, a high-profile company, duh. And so you're going to have a lot of ratings changes. You know, you're going to have upgrades, downgrades, price target changes and stuff. And that's the stuff that's going to impact the stock tomorrow. As we look at this at 213.20, I can pretty much guarantee it won't be trading at 213.20 tomorrow morning. The only question is, will it be trading at 218 or down at 208? So what's the trade? Here's the trade. You keep your stop. If you're buying this stock, you want to keep your stop below, we'll say, 208. Frankly, you could even put it at below 210, not at 210, but below 210. I tend to want to, in this case, trade a little bit smaller, give the stock a little bit more room to wiggle, because there's going to be everybody and his brother and cousin Vinny trading the stock tomorrow. It's going to have massive volume first thing in the morning, and so the stock can gyrate around a bit. But if you just look at this general level, I think you're going to be just fine. At Option Market Mentor, we put on an iron condor in the afternoon, just slightly before, about an hour before the close or so, and we sold the November 230 calls and bought the 235 calls, and then we sold the November 210 puts and bought the 205 puts for insurance. And so for us, if the stock does in fact stay in this range, we're going to be happy campers. So anyway, that's the deal on Apple. And members, I have actually some retail stocks that I want you to be taking a look at. And also, just a heads up, I spent today doing some research looking for companies that are kind of flying below the radar, and I actually found quite a few, and that's for the weekend update, but I may in fact be able to get that out to you tomorrow during the day so you can look at it, and if you find anything to be actionable, then you know you can do that. So watch for that. I'm not real sure whether that's going to happen or not, but that is my goal. So anyway, this is Dan Fitzpatrick, Stock Market Mentor. I'll see you next time.